All right, Grand Rising, Grand Rising, Grand Rising. Grand Rising, Grand Rising, Grand Rising. Let's start our day with some bounce. Start our day with a little energy. We're not going to let nobody knock us off our day. So good morning. Let's go. I hope you guys had a great yesterday, evening, day, done what you had to do, etc. What we're going to do is we're going to go over strategy today from the top to the bottom. We're going to start breaking things down, and I want to obviously we're not quite Fix It Fridays, but we are going to, if possible, try and take some questions and try and see if we can get some trades. What's going on here? What's happening here? Try and see if we can get some potential setups for today. All right. So let me turn my music right down. I should be loud and clear. My music should be background, barely hear it. Atmosphere, all right? If it's not, then do just let me know, okay? Do just let me know, but we're gonna get straight into it. And I'm going to start with US 30, all right? I'm gonna start with US 30 today, and we're gonna go and have a look at US 30 USD. All right, first things first, guys. If you are using TradingView, okay, and you're using it to look at charts, you're using it to look at different pairs, please pick a provider. I use Oanda, so I always try and find whatever pair, in Oanda. Now, I'm not trying to say Oanda is the best or whatever, maybe I'm just trying to say that I want to keep things consistent. If Oanda gives me bad candles, I want them consistently bad candles. Like I want them consistently the same, so at least I can evaluate everything within that metric. Okay, within whatever way that they're not giving me great candles. I hope you understand what I mean by that, all right? All right, so this is United States 30. Let me open this up as well and try and get as much screen as possible. And let's understand the steps in the process. Remember, guys, very shortly, University Academy, we'll have all steps, processes, etc. Things for you to go over, exercises, questionnaires to question yourself, calculators that you can use, compound calculators, etc. Okay, it's going to be great. It's going to be a next step in our journey, and there will be some opportunities for different members of the family that I'll definitely need to discuss with them individually about. All right, so United States 30 USA. So look, first and foremost, let's have a look at something. All right, we're going to go over here. And we're gonna go on CNBC, Dow 30, all right? This is the US 30, all right? For those of you who don't know the Dow. Oh, breaking news, watches of Switzerland shares plunge 28% after guidance cut. Interesting. All right, let's go. I'm gonna do this here, can you see this? Oops, I'm gonna press this button here just because I wanna section off all of the companies that are down percentage wise to all of the companies that are up percentage wise. Does it look like there's more companies losing strength, as in losing share value, than there are companies gaining? It does to me. Now that's not the be all and end all, all right? And I'll tell you why it's not the be all and end all, because obviously there are certain behemoths of companies in this US 30. Yeah, obviously they're all large companies, 30 of the largest in the United States of America, but there are a handful of, oversized ones, okay? Apple, for example, in here, okay? Microsoft Corp in here, all right? And some of the other ones. If we want to know which ones are the largest in order, we can also find that out as well. But for now, we're just going to leave it there. Now, it looks like there's a lot more companies losing strength than there are gaining strength. Obviously, markets, New York hasn't opened as yet. But I'm going to use that in the back of my mind. And I'm going to start looking at US 30. All right? So, as you can see here, if this is going to sort itself out. See that? I'm trying to give you as much screen as possible. I'm on the daily. Let's go on a weekly. All right. Now, why am I going all the way back here? I'm just trying to see what this market's been doing. Yeah. Obviously, we know what it's been doing. Okay. It's been going up and up and up and up and up. It's been pushing up. Okay. And I'm going to try and connect some data points. All right. So I'm going to connect. Let's have a look over here. I'm going to connect this data point here this looking like so. Tell you what, looking like so. Okay. And I'm gonna do this. All right, I'm gonna put a few different lines on this chart. All right. Here's one. Okay. I'm also going to take into consideration COVID, which is this spike here, and also make another line like so. And I just, when I put my top ends in, or the other end, I can't say the top end because if the market's bearish, it should be the other way around. I just pull out a parallel line. I make it completely parallel. How do I do that? I hold control on my Windows machine. Yeah, if you've got Apple, I'm not sure what you have to do. Maybe you've got to phone somebody, give blood, scan your eye, I don't know. But on Windows machine, I just hold control, click and drag, and it gives me an absolute duplicate of what I've put in. All right. Now I've put in some lines in here, just because this COVID was an anomaly, but I've just used it, taken into consideration, because I've seen this trajectory from COVID, data point. I've seen it had to have some value over here because the market came and kissed it and moved up. Let's go to our daily. All right. That was just us really zooming back. Now, believe me, guys, we don't necessarily, for us day traders, what happened at 12 years ago ain't necessarily going to be affecting us. But it's just good to know where we are, all right? Especially if you can manage your chart so that it doesn't get too messy. When I'm normally teaching, my chart gets very messy because I identify everything for you lot to see, all right? And it does get a little bit messy sometimes, but is what it is, all right? So we can see that this market here since March 2020 has made a higher high, higher low, and currently making higher highs over here, all right? I think that's fair to say, all right? So I can see, if I was to zoom in to get some more information, because I want to take some trades today, that the market was bearish. Have a look. So I've put in these other lines so we can understand what the larger trajectory, because remember what I said to you about the trend lines? They're a guide. They are simply a guide of what's going on. So that little line in here is a guide letting me know this market overall at the moment is bullish. That's the overall energy. All right. Making higher highs and higher lows. Okay. The market was in here. Let me delete this one. Was trading. Let me make it a little bit brighter because I don't know what you guys can see at home. All right. It was trading down within this range. Have a look. Boing, 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 boing. And then something changed right here. In October 2023, the market started breaking structure bullishly. All right. Boom. And this is this trajectory. Can you see here? This is the range that has been trading in this narrow bullish range. I hope you can all see this. It's very clear. All right. The market's been trading within this narrow bullish range, making higher highs, higher lows, high highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. So structurally, let's look at structure. Here is structure. Let me make it yellow. Here is structure. Here is structure, here is structure, here is structure, here is structure. Okay. Now, why is this one structure? Because it's the last low before this highest point. This is the highest point. Right here is the highest point this market got to. And then it started to go sideways. Let me drop it to a 4-hour time frame. It started to go sideways. You must do this with every chart that you open up. All right? You must go through this process. And this process should be like absolute bread and butter for you. Like waking up in the morning, brushing your teeth. You don't have to think about it. You know where the toothpaste is. You know how to open the cap. You know how to squeeze it and get the toothpaste out. You know exactly how much you need. You know what you're doing with it next. It should be like that. What is this little thing here? Yeah, I bet. All right. You know exactly how to go about doing this in your sleep. So right about now, what is the market, guys? In your opinion, especially looking at it on the 4-hour time frame, is the market bullish, bearish, or is it sideways? Bullish, bearish, or sideways? What do you think? I'm asking some baby questions. It's sideways, exactly. We can get some interaction, okay? So the market's been bouncing around here, making higher highs, higher lows, higher highs. So as our sister's activated and she's spoken, let me ask sister a question. When we see sideways action, what are we concerned about either side of the range? Like what can we expect either side of a sideways range?
Break of structure.
No, think about it. What on the top of this level here?
Liquidities on both sides.
Liquidity. It's a build-up of, it's a build-up of liquidity. It's fine. That's why I said sometimes you have to say it out loud so that you make the mistake or so that you just reorder. Because I know you know. I know that you know exactly what I'm talking about. But sometimes it has to come like second nature. All right. We're trying to make this whole education so that you can teach it to somebody else. This is when you really know that you know something, is when somebody else is going to say, all right, then, sister, tell me what's going on here. And you're going to open up a chart and you're going to talk to them. And they're going to feel yourself, rah, you actually do know what you're talking about because you're so confident. You're going to say liquidity is building outside. All right. So let me put some little, some text in here. Let's do that. Let's double click our line. All right. So over here, this is how I represent liquidity. I just go like that and I tap these buttons here. All right. And I tap these buttons here.
I'm not getting no sound at all.
Yeah, me neither.
Yeah, me neither.
Must be his network.
If you guys can hear me, can you hear me?
Yeah,
Can
I
hear you, yeah.
Okay, please bear with. I'm having some connection issues with you. So just bear with me 1 second. Can you not hear me? Can you hear me? Am I back?
Yeah.
Okay, I've had to hotspot my phone. I don't know what's going on in my area, but my connection seems to have dropped. If there's any issues, if you guys could just say. Can you guys see my screen? Or is my screen blank as well?
Yeah, the screen's black. Can hear you, but no, nothing.
You can hear me, but the screen's black. Okay, do apologize. 1 second. 1 second. I don't know why I'm having these connection issues. but you should be able to see my screen now, hopefully.
Yeah, back up.
Yeah, you're back.
All right. I don't think we are going live, and I'm not even going to force it. Maybe we are. Say no, it's not. I don't know if we are going live or not. It should be, but we'll see. So, as I was
Yeah,
saying,
we're live.
we are live. Okay, fantastic. As I was saying, guys, let me try and. Yeah, so we're here. All right, this market has been bearish. All right, so right now we're going to try and slap in some lines. I'm conscious that I don't want the signal to cut out, so I want to jump to it. You want to be able to look at the markets. We can see that we're in this sideways range. We're at the bottom of the range, okay? And we can see that this market has been bearish. Have a look. I'm going to slap some lines in. Now, what do we want to do at the top of any range, or what do we want to do at the bottom of any range? Let's go. Let's get some interaction. What at the bottom of any range? What are we interested
Sell at
in
the
doing?
top and buy at the bottom.
Of any range, that's the knee-jerk reaction. At any range, that's the knee-jerk thing that we want to do. We want to be looking at a range, thinking to ourselves, you know what? Within this range, and let me get a bit deeper. Why? Why do we have this concept of selling at the top of a range and buying at the bottom of a range? How would you explain it if you was teaching it to me? How would you explain that concept if you was teaching anybody?
Is it the concept of supply and demand?
No, I'm not gonna give you that one. That's a bit flowery. It's not clear enough.
There's a concept of premium and discount.
That's right. All right. That's what I'm gonna go for. It's the concept of at the top of the range, something's expensive, and at the bottom of a range, something's cheap. Now, even whether that range is more expensive than it was 10 years ago is irrelevant. If you go to the shop and you want to buy something today, you're buying at today's prices. So you're going to look back and say, bro, last week this was only £5. What do you mean today it's £10? That's how you're going to evaluate whether or not it's expensive or cheap. You're not going to say, Rob, what? Like 8 years ago, this was £3 and now you're charging me 10. You say, bro, 8 years ago? What are you talking about? You're going to look within the range and understand that, look, this last, at Friday, the 12th, the price was up here. Okay. And now it's down here. Up here was the top of this range. This range is currently going sideways. So the top of any range is premium, as Snipes said, and the bottom of any range is a discount. So in the back of your mind, you want to be buying at a discount and selling at a premium. But that doesn't mean that, right, you just hit the button. You're not playing snap. You can't just say, okay, right at the bottom, I'm hitting the button. It doesn't work like that. We need confirmations. So at the moment, this market is coming down here, trading down here. But let's look on the bigger picture. Yeah, remember the bigger picture that we drew? So the bigger picture that we drew is that this market, have a look, could possibly, I'm going to pull out this line as well and make it a bit brighter. All right. Let me just extend this right line and let me make it a little bit brighter. Okay. So I put some lines in. All right. Have a look. So the lines that I put in was a duplicate of this line here, of this angle. And why does that angle exist? Because of this data point, this data point. All right. And we can see consequent touches on this data point, and this is COVID. All right. All right. And it extends over here. So it's a parallel line that we've touched. And why have I got it to the top end over there? Because the top end has to go to the highest point, has to touch the highest point. Or alternatively, we could turn around and say this, and say that all this action over here was just an anomaly, but it doesn't make sense that us doing that. That makes less sense. Okay. And we can also see I put in this angle here of this range. Why is that angle exist? That angle exists because of this data point and this data point. All right. And then we pull that a parallel line, and that parallel line happens to also touch this data point and this data point. What a coincidence. Okay. So if that is the case, we're kind of in the middle to the bottom, more middle than bottom of this range. All right. Meaning that could this market be wanting to go up here and get to the top of the range? Possible. All right. We've already grabbed the liquidity above this level here. All right. So let's go to some teaching, some education, some understanding. When we grab liquidity from any time frame, what do we see over and over and over again?
Price going the other way when it grabs the liquidity.
Yeah, we see this nuance that the market likes to grab liquidity, and then for whatever reason, we know what reasons, but it runs in the opposite direction. Okay, so maybe this little push above this little high over here, even though it's quite a big push, all right, it's a very big push, but obviously we're looking on a monthly basis. This little push could be a grab on liquidity, and if it is a grab on liquidity and it wants to run in the opposite direction, is there anything that we can see, any reasons why the market might want to run in the opposite direction? I'm on the monthly, by the way.
Inefficiencies, there's inefficiencies, market prices,
Imbalance.
inefficiencies.
That's correct. We can see these inefficiencies in here. We can see these inefficiencies in here. Now, am I saying that the market is going to go in one direction? No, because I don't have a crystal ball. Yeah. But what I am saying is, if it does do this and then run all the way down here, I would understand why. Because it just grabbed liquidity from above here. All right. Nam, 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 nam. And then it might start a little bearish run in here. That is on a much, much, much bigger scale. All right, now let's go knuckle down and see what's going on right now, okay? So right now, like I said, the market was making higher highs and higher lows, all right? This little yellow level was the little bit above the liquidity. Look, this little yellow dotted line, let's check that it is, make sure it hasn't moved. Yeah, okay, great. That little yellow dotted line here, let me make it a little bit thicker, is the little, it poking its head above the liquidity. And soon as it did that, what did it start doing? As soon as it poked its head over this liquidity, what started happening? What started happening as soon as it poked its head over this liquidity? Well, it's this on the screen for you guys to see. It started going sideways. Hey, look, the market was going up with no issues. 1 step, 2 step, 3 steps. So going up the stairs, no issues. As soon as it poked its head over this liquidity, it started going, should we go back now? Should we turn around and go back now? We've kind of had a good run. And since Christmas, which we understand at Christmas time, what happens? People go on holidays, people chill out, bankers disappear, etc., etc., etc. Since Christmas, look, this is the 20th of December. Yeah, this is the 20. Look, since Christmas, we've just been going sideways. The boat, as I like to say, has been kind of turning, saying, you know what, we've had enough of that. We've been kind of turning. We're slowly turning around. So what I would love to see, because at the moment, this is the bottom of the range. This is buy territory. I should really be interested in buying this market, yeah, for this market. Because remember, the market does what it has always done over and 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 over again until it decides to do something else. To do something else. That statement is a true statement. It cannot be incorrect. The market does what it has always done over and over again until it decides to do something else. Okay? I'm covering all bases. Okay? So the reality is right now, though I'm thinking to myself, I'd love to buy, I understand I should buy at the bottom of a range. I'm concerned that this market has poked its head outside the liquidity. Now it's going to run back on a bigger time frame. Can you see these gray boxes that I drew in? And come and close up these imbalances, because on a bigger time frame, all of these gray boxes, these gray areas here, is imbalance. Okay, on a bigger time frame, these two gray boxes are in balance on a much bigger time frame, on the monthly or maybe daily. All right, so maybe the market wants to do that, and that's what my concern is. That is preventing me from just blindly hitting the button for a buy and saying I'm going to trade this consolidation up and down here, because don't get it twisted, this is a 600, 700 pip range. Loads of pips in there. If we knuckle down also, have a look, if we knuckle down, we can see that the market at the moment, though it is bearish and making lower lows, lower highs, lower lows, lower highs, and it's scribbling backwards and forwards in here, all right, is that at the moment, we're kind of at the top of this little range here. All right, now it's very messy. I'm going to try and drag it out a little bit. It's a bit messy, it's a bit ugly. I'm going to try and make range a little bit neater here. Yeah, it's kind of, something's going on in here. It's a bit of a mess. Let's just do that. All right. So at the moment, the market's gone down, up, down, a little jug around here. It's gone up, down. We're in here. Now at the moment, like I said to you, me personally, guys, is we're at the top of this impulse coming down, okay? And overall, I'm concerned that we might see a run in the opposite direction after a much bigger liquidity grab. Yeah, grab of liquidity on a much bigger time frame. All right. However, if I'm looking at taking trades today, this market is going sideways in here. Okay, and the question I'm asking myself is this market going to break up here, start breaking some, or even on a smaller time frame, break outside of the range, do this, and then close back above here? All right, and then start deciding it wants to go and trade back up into this range, which I said to you, even if this market wants to go down, there's a very high possibility that it goes again and eats some liquidity in a smaller time frame before going down. So don't get twisted. This market from today, tomorrow, next week could start pushing up here to grab this liquidity, or some news can come out to make it very quickly spike up here, grab the liquidity, even if it really wants to come down. That is not an impossibility. All right, it's not. I would have preferred to have seen some kind of liquidity grab somewhere here earlier, and then I'm thinking to myself, it doesn't want to come back down here. But up here, this is a big pull on price. It is. It's a big draw on price down here. Okay. So right now, what would I be doing? I have to wait. I have to be a patient trader and wait to see what's going to go on. All right. So first and foremost, if I'm really anxious that today I need to take a trade, for a start, I don't believe this is a 10 out of 10 trade, because we're at the bottom of a range which I should be buying from. I'm concerned that we're going to break outside this range and start having a little bearish run to close in balance. All right. You know, if I was taking a trade from all the way up here at the top, this would be a more of a, and it started breaking structure, I'd be more, I'd be like, yeah, okay, that's at least a 7 out of 10. But right now we're at the bottom of the range, there's a bit of a contradiction. I should really be saying we're at the bottom of the range, I want to buy this market, all right? But I'm a bit concerned, I'm a bit hesitant about that, all right? Because I need to see my structure play out anyway. Look at this, have a look at this. Even if I look at this on a smaller time frame, all right? This market was coming down in this range here. Can you see this? And this is the Unity strategy on a very simplistic. Guys, when you learn and understand this Unity strategy, it empowers you. It keeps you calm. It lets you know what you should do, when, and how. All right. So if you see this market is coming down within this range here, can we all agree? Just say yes. We can all agree. And if we look at structure, this is structure. This is structure. Okay. Now, this market here, even though we've started coming back in this direction, we haven't broken structure, retraced and closed back above yet. We're ultimately trading within this range here. We're kind of in here and in here at the moment. All of this action is within that range. You see? So there's no indication for me to buy it at the moment. There's no one showing its hand for me to buy this market. Because the market's actually been making lower lows, lower highs, lower lows. Yeah, and at the moment we're at a lower high. We haven't made no higher highs. We haven't broken no structure. This little level here doesn't matter, because this little level here is within this range and this range here. This is just a minor, like, little, hasn't broken any little structure. Not on the 15-minute time frame anyway. Okay, on the 5-minute time frame, we might see some more little nuances. Okay, so for me right now, I would like to see this market, maybe we see it do this, prick its head up in here, and then we start seeing it breaking structure and coming down here. This might give us a trade for today. Maybe we see it prick its head up in here, breaking some structure, retracing, closing back above, and then maybe the market wants to continue going up for 600-700 pips and make it back up top. This is my... I do not know what's going to go and do, because I don't have a crystal ball, but I can place my alerts. This is what keeps an eye for me. I right click, I place an alert, crossing up. My alerts know if it crosses up. If I do that, if I right click this, oops. What I've just done. If I go to my alert over here, right click it, and add alert lines, that's the alert line. That alert's going to let me know what's going on, if it's going to be breaking up there. And this alert, when it crosses down, is going to let me know if it's crossing down over here. I don't know when this might ring. This might ring before New York Open. It might ring afterwards. Who knows? I don't know. All right. I can go and look at the news. I can go look at the Dixie to also give me an indication of what may be happening in this market. So we've already seen from this is us building up our confluences. We've already seen from CNBC, we've got more we've got more of these top 30 US companies, including some of them, the giants that are reporting, weakness percentage losses in their value, okay, more than the greens. I'd say probably looks about 60-40 to me. Yeah, or yeah, it's about that, maybe even 65-35. Okay, that's the first little bit of confluence. Okay, so maybe there's a weakness in these US top 30 stocks. Yeah, I've also seen that we've been bearish, and at the moment we're consolidating. I'm waiting to see what happens, and based upon what, that's going to give me another bit of confluence if I see structure break and indicate where it wants to go. And even if it just indicates, because remember, it's indication, correction, continuation. Even if this market indicates it wants to go this way, I can't just hit the button. And when it comes back down here, I can't just hit the button. The break and retest people hit the button when it comes back down here. Good for them. Yeah, but at that point in time, don't get twisted. This market is going to just go. Why can it do that? Because maybe we're just grabbing the liquidity above this little level here. So I don't want to get involved in just hitting the button, break and retest. I want a confirmation. I want to see it break. I want to see it retest. I want to see it close back above. That's an indication, correction, and continuation for me. Okay, especially the fact that this market has overall been going down and we haven't broken this swing level here. You see how I'm building up this story? We can also go and look, and like I said to you, the Dixie. Let's go and look at the Dixie. Let's go and look at the Dixie. And the Dixie is the dollar index. Now, why is it relevant? Well, it's just telling you the actual strength, the DXY, the dollar. And the same way you can look at the Bixie for the British pound. And you look at the Jixi, that's how they pronounce it, for the Japanese yen. To this, that dollar. This isn't the dollar against something. All right. So let's zoom out. Let's wipe the charts. If you want to reset your chart, guys, you go to this little cog. You hit auto, and let's see what's going on with this market. All right. Now, if I wanted to, which I am going to do now because I've got you guys on the call, I'm going to zoom all the way out and see what's been happening. Well, I can see that since, 2008, the dollar has been bullish. Can we see this? Look. I don't know what alert I've got in here, but I'm going to remove it. All right. Since 2008, I think we can all tell that this market's been trading within this range. Have a look. Do you see why I do these little ranges? Ping, pong, ping, pong, ping. The next one we're looking for is pong. Pong brings us down here, right? Because we're pinging and ponging. So pong should really be bringing us back down to our range. All right? So I'm already thinking to myself, we're in pong territory. All right? So let's go over here. I'm dropping my time frame down to the daily. Now we can see how the market is, but now again, all the way back to just the last couple of years, 2022, extremely bullish, strong dollar market. We know why that was, how interest rates were just going up and up and up and up and up. It's going crazy. All right. Now we can see the market broke structure and started pushing down. Why do I draw my trend line like this? Because I have to I'm taking this data point from up here, but I'm also taking the last high before the lowest point. I'm taking the last high before the lowest point. And I'm just going to do that. That's fine. I'm cool with that. That's the range it was trading down within this range. And then we've seen over here a break of structure bullish. We've seen a retracement here. We've seen a higher. Have a look. This is coming down. We've seen a low. We've seen a break of structure here, making a higher high. And this at the moment is a higher low than this. So the question is this market now doing this, yeah, before maybe it decides to come back down here? I don't know. All right, going into our Elliott wave theory. If anybody understands Elliott wave theory, we're talking about 5 or even 7-part impulses and then 3-part retracements. What do I mean by that? I mean, we have a tool. We have some tools in here that come as standard. And if you have a little play around, you would have seen, if I can find it. I'm talking wicked and bad, but I can't find it. Can you see here? Elliott waves. It's on section. All right. And Elliott wave believes that the market moves in 5-part impulses. All right. So let me show you this one. it would probably be something like this. It's not great because there's other theories that the 2 to 3 is, it's a longer part, but 5-part impulses, and then it moves in 3-part correction. You see, so it says it here, it's telling you everything. Elliott correction wave, which sometimes is A, B, C. Do you understand? And if it did that, and this C came up higher than this point here, I would understand, even just looking at this chart, because A, there's liquidity above these highs here, where I've drawn, and B, when I look left, I see some, what do I see over here? That might be a reason why this A, B, C could push up into this kind of area. What can I see over here? Imbalance in here. All right. If you can't see this imbalance, remember there is a little tool here. Let's see if it works. This last time it didn't work. It's called the fair value gap. You press it. There you go. See it? It fills them all in. Now my eye is immediately drawn to these things. I don't need this tool. But if you are someone who need a little bit of help, you can use this fair value gap tool. I'm just saying to you, it's not impossible that this market wants to go on a little run in this direction into this level on a much bigger scale. This is the way on the daily. All right, let's knuckle down, see what might be happening today with the dollar index. Well, today with the dollar index, I can see that the market was trading down within this range here. Have a look. Okay, let me get rid of this. Remember, these lines don't have to be, you don't have to be there for 20 minutes getting your lines, on the little end. It doesn't matter. It's a guide. It doesn't make sense doing it anyway, because like I said to you, sometimes Awanda or wherever it's not even Awanda, this is capital.com, are going to give you candles slightly different. So you sitting there for to the millimeter. It doesn't make any sense. It's a guide. So the market is making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. All right, lower lows. And then we've seen the market break some minor structure in here, break it here, making a higher high, this minor structure, coming down here, making a higher low, and then breaking structure again, making a higher high, but we still are trading within here. And this little push up in here on a smaller time frame, it might have only pushed in there to do what? Why might it only have pushed in there? What might it have been doing? I can't say for definite, but it might have come in here simply to close up this imbalance. Look at this big gaping hole. And that's why the market's in here. Boom, closes it. And now we're having a reaction. And now there is a potential reason that I can see once again for this market to come down in here. Let's draw some more lines. Have a look. This is the range is currently trading up with it. This is the top end, which is a parallel line that I'm just pulling out. There's a possible reason why this market could choose to come down in here. Can anybody see those reasons? If I want me to put it on a higher time frame, I will do. But I can see some reasons in here that this market might decide to come and push down into this level here. It's imbalances, and even deeper than that, a gap. Seems to be a gap in this dollar market. Gap in here. Look at this gap. A gap, guys, is when there is clear water, clear air in between two candles. There's clear air in between two candles here, plus imbalance. So it's not impossible that this dollar index wants to rebalance a bit and come back down in here, lose some strength. And if it does lose some strength, right now it's pushing up in here. Why would it be pushing up in here? Over and over and over again. It's like a game, guys. This is like a game. It's like if you was playing some games there. Candy Crush. Yeah. It's a game. It's the same thing I'm looking out for every single time when I'm playing my Candy Crush. I'm looking out for the same thing. Where can I see, some adjoining colors where I can quickly just, make a 4 in a line or 5 in a row or whatever it may be. So you're looking for the same thing over and over. The Candy Crush doesn't change halfway through. Like the rules don't change halfway through. Like all of a sudden you're looking for this and then now you're looking for something else. No, it's the same. So right now, look, have a look. I'm looking at this. Doesn't matter what time frame maybe, but the market's there. The market pushes the push down. So let's go to my 4 hour. Let me make it more sense. I can see the gap that happened in this region. Oh my gosh, that's not what I want to do. I can see a gap. How do I go back? Sorry, let's go back. Start again. And we go to a smaller time frame, go to hour. The market was here. Here's structure. Higher high, higher low, higher high. Bear in mind we're looking at the Dixie. All right? And then we see it. Let me not make the same mistake again. It's this one. No, it's not this one. One more time for luck, all right? This is, I wanted to do it candle at a time, but I don't know. I'm just having a little blonde moment. Let's just go here, all right? You can see this candle here. Here's structure. Higher high, higher low. Breaking structure. As it broke structure, it left the imbalance in the market. Okay, it left a gap. So the market gaps and it came back and closed this gap. But ultimately, right now on this time frame, we've broken structure. We've made a low. This is now a lower high at the moment, and maybe this market wants to come down here and lose some strength, which will coincide with, so maybe it does or not. So I'm saying if the US dollar loses strength, let's ask you a question. I was just about to trip myself up. If the strength of the dollar gets weaker, what happens to US 30? What would happen to US 30 if the dollar got cheaper? This is a good question to think about.
It would be bearish.
You sure? I don't know. I'm asking. Are you sure?
Not 100% sure.
That's fine. And I like the fact that you said that. What? Does anyone else got any opinions? I don't know if we've got
There could be more people buying because, it's at a lower price, possibly.
So if more people were buying the US 30 when the dollar went down, would it go up or would it go down?
It would go up.
Exactly. So basically, there is a general consensus that if something gets cheaper, people want to buy it more, right? So if, for argument's sake, Apple stocks started to, if the dollar, which is what I'm going to buy Apple stocks in, started falling in strength, and I've got my British pound or my foreign currency that is gaining strength or holding its strength, I've got more of an incentive to buy the US 30 as the dollar gets weaker. Does that make sense? And if you don't believe me, look at the chart. This chart is the dollar index 30 superimposed on top of it. So the US 30 is the orange one, and the candles of the dollar is the dollar in the index. Can you see? It's like the mirror image of each other, right? When this is going down, this is going up. When this is going up, this is going down. When this is going down, this is going up. So it confirms what I just said. When the dollar gets weaker, we typically see the US 30 going up. Because foreign money coming from all other countries has more strength now. You can buy more shares for your Russian ruble or your Jamaican dollar or your Mexican peseta or your British pound. Do you understand that? So can you see how even now in this education that we're just generally trading, you've now learned about correlations and how to compare one thing to another by simply superimposing. How did I do that? I went to this button here, I clicked plus, and then I added US 30 on top of it. So if I wanted to remove that, I could go and right click it, remove it. And if I wanted to, I can add, what happens when the dollar gets weaker, generally to the British pound, GBP USD. And I can just superimpose that on top of my chart. You see? And I can see now when this is down here, going down, this one was going up. So that's also told me that the dollar index and the Great British Pound have an inverse relationship. Can you guys see that? Can you guys see how easily that we've done that? We've been able to work that out and understand how we can use that in our trading. So if for whatever reason this dollar index is going down and you're also selling the market in US 30, you might need to check again. You say, am I correct? Let me double check. Double check that. Okay, let's give it another little look. All right, no problem. Let me remove that. So with that said, that this market here is at let's go down here. May start pushing down here to close this imbalance and because it's made a lower low, possibly made a lower high, then it's possible, if this is coming down, it's possible that our US 30 might push up. It's possible. It's not impossible. It is possible. Okay? So therefore, this is helping me to build my story. Am I making sense to somebody? Have I taught them something as they, have I helped? Like the dollar index is very important for us to be able to look and see what's happening with the actual currency. Okay? For the actual currency. Obviously, we was looking at this here, and yes, we can see that yesterday, or maybe there is this bearish action that's been happening, this loss of the value of these here. Yes, I'm not disputing that. But it's not decisive. It was at 60-40, whatever it may be. And remember, markets haven't opened yet today. This is giving us information, but we haven't got the balance. But like I said to you, we don't use any one confluence in isolation. And at the moment, I do not know what I want to do with this US 30 market because we're at the bottom of a range, yeah, and it hasn't shown its hand, yeah, and at the bottom of the range, I typically want to buy. Also, because I'm a bit concerned, because I think to myself that maybe the market might want to turn because it poked its head above this liquidity, above this yellow line here, all right. Previous old high. I think it's all-time high. I think so. Can't remember. Maybe. Check liquidity. All right. So I'm not sure. So personally, guys, I'm going to wait. If you're looking for top setups, I want to wait to see what this does. If this breaks up here, makes a retracement, starts going up, I start seeing the Dixie falling in strength, going to hell. I start seeing the Dow all of a sudden. The markets open and these start going green all over again, and these are all green. I want to be in for the buy. All right. This is why you hear people turn around and say that they don't trade until markets open. They don't want to trade until they can see what's going on. Because at the moment, we don't know when New York opens, what these guys want to do. Whether they had a little meeting, a little huddle before, for the day. And it's like, listen, mate, we want to execute all of these orders. And we want to buy. We don't know. That's why you hear people say they wait for markets to open. All right. So cool. Let's go and look at another one real quick. Anybody want me to look at a particular pair, and we'll break it down a lot quicker. I'm not going to break down every single nuance. We'll do a lot quicker, like we was trading in a live session. Any pair. Let's go. Any pair. Any pair. They want to pick a pair. Any pair. Pick a pair. Any pair. Anybody? Anybody got a particular pair they want me to break down and us to do it together? Nobody?
Yeah, UJJ.
UJ. Right, USD JPY. All right, well, we've already looked at the dollar index, and we said that the dollar index may lose strength because it made a lower low, and it's just retracing at the moment and potentially making a lower high as it closes up some imbalance. We've already said that. So let's look at UJ. So on the basis that dollar may be losing some strength, like we just said, obviously, I'm going to break this all down, but immediately we can see this market making higher highs, higher lows, higher highs, higher lows, higher highs. If I was to draw in a line, an angle of incidence of what this market's been doing, it was kind of like this point, from looking at data points, kind of was in here, all right? And then we've seen it accelerate in here. Yes, sir. All right? In between that range there, okay? And that's the top, of the range here. Okay, all right. So I'm gonna delete everything. We start from the top, and like I said, I'm gonna move quickly. All right. Okay. So if I was opening this chart, especially if it's not a chart that I trade every single day, all the time, I want to know what's going on. I would not need to go back to the start of time. I'm not gonna lie to you. When you see me just doing all that stuff, it's just so you guys can see and understand how this market is so fractal. How the same things happen over and over and over again on different time frames. Okay, but that's enough for me. All right, I can see this guide in here. If I wanted to, I'll also slap this one in here. Have a look. Taking into consideration these data points over here, and potentially these data points over here. Top end would be like this. Okay, let me go down to my daily time frame. I can see that within that range, the market, I'm going to make it a different color, pushed up. Like so, Orange, no, blue. All right, pushed up like so. This is the top end. All right, then I'm gonna get even. That is still going all the way back to 2020. The start of last year. We're in 2024 now. We can see how within here, it's a minor structure. It was definitely broken by this push down here, but it didn't break this swing structure. So the market's ultimately trading within this range of a bullish impulse. Higher high, higher low, higher high, higher low, higher high. This is the higher low. A fantastic entry would have been, have a look, as this market, let me go to my 4 hour now. A fantastic entry would have been when that market actually started to turn from making this higher low over here, all right? Which would have been me looking at this range of the market coming down here, all right? And then when I see that it started to break structure, so let me show you. And in a 4 hour time frame, we'll have a look when. The 4 hour time frame is we can see some minor structure got broken in here, all right? And I'm talking about this level here. This is more of the major swing structure. There's some little minor in here, but we saw this one break, retrace, close back above. If you was wicked and bad taking trades on this big time frame, you could have taken this trade, which would have been a very aggressive trade on a 4 hour time frame, and you would have been laughing your head off now. Or a safer trade would have been placing your stop below this low. You'd still be in the money, but only to our 1-to-1. Because we broke this structure, indication, we corrected, retracement down here, we continue, push back up in here, all right? Now let's drop our time figures. Nobody's taking 4 hour trades, all right, cool. When this market was in here, and I've seen this market not only break this minor structure, but also break outside of the range. This range was this 2 yellow lines. That was the break, the indication. So everything above this line here, let me do a nice straight line. Oops, let me do a nice straight line for the people on YouTube, because I think my charts are a hot mess, all right? Like that, do that, make it white. This was the break above that structure. Everything was above that. Have a look. Does that look like textbook look? Break? Indication? If I'm going to put some letters in here. All right, let's put some letters in here so you guys know. I, all right, for indication. This retracement here is what? Somebody tell me what it is so then they understand what we're looking for. What is this? Let me put a line in, maybe you don't know what I'm talking about. So first we've got this push here, which is I. Can I just label this? No. All right, I. And then we've got something else that happens. And what is it?
Correction.
Yes, this down here is C. Now, at the time when it's happening, we don't know where it's going to end. It's easy in hindsight to go, oh yeah, look, it's just going to stop right there. We don't know. This is why we can't just break and retest, just hit the button down here. Some people, that's how they work. Some people right now, look, people will just hit the button here. Watch, let me show you the difference. They'll hit the button here and place their stop below this level down here. All right? Yeah, or below wherever the last low was over here. Good for them. But in my opinion, they've taken that trade with less confirmation and potentially still a bigger zone. Because I'm going to do this. I'm going to wait for that correction, which is going to be there. All right, so that's the other part. That's the other C. Let me color code it so we all know. Colors are going to be green. Text color is going to be green. This one's going to be red. The text color is going to be red. We leave the other one as white. And you can't even see it anyway. But you get my point. All right? Indication, correction, continuation. Because when I see that continuation, I'm able to actually get in here on the close of that candle above and even get a smaller entry below the last low and an extra confirmation of where the market wants to go. That's a 1 to, might as well say 5. Great trade. Okay, great trade. Anywho, let's look at what's going on right now. That's just going back historically so you can see. So that would have been a great trade as it broke. Why would it be a good trade as well? Why? Because I'd be buying at the bottom of this range. At the bottom of the... All right? Let's have a look at what's going on right now. Right now, as I said, this market is pushing up like so. And if USD, we say, is going to lose strength, possibly because of the Dixie, and we're at the top of this range, what are you thinking, Al? What are you thinking? Possible? Might happen?
Yeah, the yen may gain strength. What's going to happen is in, I think, the 22nd, I think it's the yen interest rates day for the Japanese, the Bank of Japan. So leading up to that, I believe that if the Dixie does lose strength, the yen will start will get stronger, and then there will be, obviously, it will sell off.
See, and that is Alan adding fundamentals involved. I was just asking from a technical perspective, but from a fundamental perspective, I was also got some sort of information, some sort of confluence that you might say, maybe that might be the case. I'm saying personally, I'm looking at this market. And that USD JPY, as well as the fact that the dollar index looks like it might lose strength, the dollar. And I'm looking at this, we're at the top of this yellow range, which is sell territory. We're seeing this market coming down here and breaking minor structure. When I say that, I'm saying that because the market is currently trading within here and here. Yes, it's broken some minor structure, which is here. It's broken that structure. If I go on a 5-minute time frame, it makes it clearer. It's broken those structures. Look here, boom, broke past here, retrace, doing the hokey cokey, broke past there. It's breaking those minor structures, but the major level is coming for it is down here. I think it's going to continue coming down here. There's liquidity below here also. And I think if I was looking at a trade today, especially being at the top of this range, I'd be interested in selling USD JPY today. And in the future. That will be my bias until something else is happening. All right. Right now, we've seen this market push down here on the 5-minute time frame. We've seen a little imbalance open up in that little 5-minute push. Yeah, I mean, I'm personally feeling like, to myself, if I was going to make a decision, there was a shotgun to my head, I'd be interested in. This is the safest trade, your stop above here. The more aggressive trade would be a stop above wherever this market may or may not retrace to close if it closes this imbalance. All right. But for now, where we currently are, you have to put your stop here. But I'd really be waiting to see a potentially closure of this imbalance, close down below. An aggressive entry will be below that high, safe entry below that high. On the basis you're trying to get down to structure. So this is structure, but really it should go beyond that, because the market is making lower lows and lower highs. And ultimately, the target would be breaking that structure over here to really give a confirmation that this market wants to go down. When it breaks that structure, I'm expecting it to do what? Even if it continues afterwards, what am I expecting it to do if it comes and pushes all the way down here and breaks this? What would I expect an initial reaction to be? Go on, somebody knows. If there's liquidity below here, if we're at the bottom of a range, what would I expect to happen? Because I'd expect to see maybe this little push back in this direction. Just grab the liquidity, market likes to run in the opposite direction, plus it's at the bottom of this range here, this blue line. Does that make sense? I hope I've made sense. I'm really conscious of sometimes whether or not I'm losing people, or whether it makes sense. It should make sense. All right? It should make sense. All right, so that's what I'll be looking for today. Let's see if that plays out today. USD JPY, if that market continues to sell off today, at least down to these little structures that we have in here, these minor structures. But really push all the way past here as the US dollar loses strength and capture this liquidity down here. And yes, there's a smaller entry, of course, if that market makes a retracement in here, making this look a lot more attractive. But worst case scenario, let me tell you something, guys. If you was making a 1-to-1 every single day, if you could take consistent 1-to-1s or 1-to-2s, you'll have a your life will change. So don't turn up your nose at these trades. The only problem when you're taking 1-to-1s and 1-to-2s is the fact that sometimes you're going to lose. And because you haven't been in the got trades that have given you a big enough win risk to reward ratio, you take one step forward. If you lose, you take exact one step backwards, which is a bit of a problem. That's why you hear people talk about, you want trades for at least 1 to 3, because it means that you can lose more times than you win and still break even or be profitable. That's the only issue with 1-to-1s. But the reality is that if you had a strategy that you could consistently take 1-to-1s, consistently meaning more times than you lost, you'd still be over the moon. All right, guys. Good morning. God bless. Is there anything we want to think, guys, today or anything like that? Is there any additional information?
Yeah, there's some red folder news for the US about employment. So that's at 1:30. Just be aware that will every data point up until the interest rate date is going to make the market move.
It looks like there's some interest rate information. Oh, inflation rate. Sorry.
That's Japan's inflation. That's tonight. Look out for that. We were talking about the yen. That will affect the yen tonight. So if you're up late, watch out for USJPY. But at 1:30, we've got some initial jobless claims. They're going to be very much looked upon by the market.
Oh, well, fantastic. Well, guys, make sure that you are thinking this year, 2024, about investing, about where to put your money, whether that's going to be in crypto, whether that's going to be in ETFs, whether that's going to be buying some stocks that you think are going to do well. But when you're looking at those type of things, guys, open up your charts. Open up your charts and see a great place to buy at, and start investing with an edge, okay? As well as trade in the markets, start investing with an edge, all right? Guys, good morning. God bless. Thank you for being here and present this morning. I know everyone's trying to get their year going and everyone's got a New Year's resolution. I'm going to say something. I was listening this morning. I want you to think about it. Failing is not the same as failure. All right? Failing is not the same as failure. Yeah? The only time you're a failure is when you do what? The only time you're a failure is when you do what?
Stop.
When you stop.
Quit.
When you quit.
Give up.
And give up. Failing and failure are two completely different things. Because I actually believe everybody who has won or who has had success, every single one of them had been failing prior to that success. Michael Jordan didn't just hit the 3-point straight away, every single basket. No, he was failing to hit, bricks, miss, air ball. And then, because he never quit, he didn't become a failure at taking those free throws. All right. And it's the same with our trading, guys. Because you failed, or the same with life. If you're failing at the moment, all right, it doesn't mean that you are a failure. All right, which is very important, especially important for our men. All right, no disrespect to the women as well. For young men, there's a lot of pressure, and we need to understand, and for women as well, not just for men. I'm talking from a male perspective, and for women as well. Yeah, but when it comes to men, nobody cares. I was watching something the other day, and it just says nobody cares, and it's true. Nobody actually. As a man, you are quite alone. But just understand and take comfort to understand that failing is not the same as failure. All right. But guys, good morning. Good morning. God bless. I am going to put on something that's going to be informative. I'm going to put on something about trading. It's the secret behind institutional trading are mind-blowing, it says. All right. Sounds interesting. We're going to watch that. And I'm going to wish all the people at YouTube that's watched our session and get value, because there's tremendous gems dropped today. Like and subscribe and share.